CoreLogic's Home Price Index when the numbers came out for March, and I noted that if trends continued the way they were going, home prices excluding distressed sales would start seeing new historic highs sometime in the summer of 2016. Guess what? The new numbers just came out for May, and it looks like that prediction is right on target. I'm Elise Glink. Here's today's Daily Update. The CoreLogic HPI for May showed a yearly increase for the 39th consecutive month, this time of 6.3% from May of 2014. The May HPI also showed a monthly 1.7% increase from April. So the latest data shows that home prices are just about 8.5% below their April 2006 peak. Excluding distressed sales, that differential drops to 4.7%, hello, which also happens to be the annual increase predicted by CoreLogic for the May 2016 HPI, a year from now. If that holds up, then the non-distressed housing market will have recovered its pre-crisis value that month, a full decade after its last peak. However, distressed sales are still way above their pre-crisis levels, and that means all the home price data, excluding distressed sales, is pretty useless, aside from providing economists some interesting statistics to analyze. According to CoreLogic's April distressed sales report, 11%, or more than a tenth of all homes sold nationwide in April, were distressed, meaning that they were either real estate owned or short sales. Now that's down 3% from April of 2014. But remember, prior to the housing market crash, the normal proportion of distressed sales as a percentage of the overall number of homes sold in a given month was generally around 2%. So we've come a long way since distressed sales peaked in January of 2009 at almost a third of all homes sold, right? So 11% doesn't sound so bad when you put it into that context. But CoreLogic predicts in its report that the share of distressed sales in the market won't drop back down to that normal 2% level until sometime in mid-2017. It's hard to feel like celebrating, right, about waiting another 2 years for the housing market to finish making a full recovery. But when you've considered that we've already waited 9 years to get to the point we're at now, it kind of feels to me like we're seeing the light at the end of the tunnel. I would just add as an aside that even though we're going to get to the same place we were a decade ago, we've had a decade's worth of inflation in the meantime. And some economists are saying that even once we hit that high, that where we were back in April of 2006, if you adjust for inflation, we're still 25% below what the peak or the high should really be. Again, numbers can say anything you want them to. I'm Elise Glink. If you want to learn more about investing in real estate, you should check out my Intentional Investor series, How to Be Wildly Successful in Real Estate, at thinklinkstore.com. I have a special discount code you can use. It's BUYNOW, B-U-Y-N-O-W, and we'll give you a huge savings. And be sure to visit my website and sign up for my free weekly newsletter, where you'll see I'm working to rebuild America one house at a time.